All right, let's get right into it. So picture this. One single Friday, and the global markets just get hit with this sudden, intense wave of fear. It all started with a little scare in one corner of the US banking world, but it sent shockwaves literally across the entire planet. So in this explainer, we're going to break down what happened, why it happened, and, what it all means. So the day was Friday, October 17th, 2025. And as traders all over the world fired up their screens, they were met with, well, this. A sea of red. From Asia to Europe to the US, markets were just bleeding losses. It was this crystal clear signal that something had seriously changed, and investors were spooked. And this wasn't some minor dip, okay? This was a major, coordinated sell-off. And all of this chaos created what the pros call a risk-off environment. It's funny, it's almost like a primal instinct in finance. When fear takes over, nobody cares about potential high rewards anymore. It's all about one thing, protecting your money. So what do? They sell off anything that feels risky, like stocks, and they make a run for things they see as safe. And the epicenter of this whole earthquake, right in the US banking sector. A key index that tracks regional banks, it plunged by 6%. 6% in a single day. A drop like that isn't just market noise, folks. That is a massive flashing red light that something is deeply wrong. And that red light, well, it triggered that flight to safety we were just talking about. Investors just piled into gold, pushing it towards its best week of gains since the financial crisis of 2008. Yeah, anytime you hear analysts start making comparisons to 2008, there's some serious anxiety in the air. But it wasn't just gold. Money also came flooding into the safety of government debt. The demand was so huge, it actually pushed the yield on the 10-year U.S. Treasury bond below 4%. And just so we're clear, a lower yield means prices are higher, which just tells you how desperate people were to find a safe place to park their cash. Okay, so these are all the symptoms of the panic, right? The red screens, the rush to gold. But what was the actual cause? What was the spark that lit this whole fire and got Wall Street so freaked out? Let's dig in. Believe it or not, this entire global sell-off can be traced back to one specific event in the U.S. regional banking system. It was that classic scenario, where you see one little piece of bad news and you immediately start worrying about how many other problems are hiding just out of sight. So here's the play-by-play. It all started with a regional lender called Zions Bank. They announced they had to write down $50 million on some loans made to a commercial real estate fund that was in trouble. But the real panic bells went off when another bank, Western Alliance, piped up and said, hey, we've got loans out to that exact same borrower. Suddenly, the fear wasn't about one bad loan anymore. It was about contagion. How many other banks were tied to this one failing fund? Now, you might be thinking, why does a problem at a couple of smaller banks matter so much? Well, it's because these regional banks are the absolute lifeblood of Main Street. They're not like the big Wall Street giants. These are the banks that give loans to small and medium-sized businesses all across the country. So if they get into trouble and they stop lending, that has a direct and really painful impact on the real economy. And in our totally hyper-connected financial world, a problem that starts on Main Street America doesn't stay there for very long. The fear of a credit crunch in the US immediately went global, and that's what triggered this massive worldwide sell-off. And you can literally see the ripple effect right here. As the news spread, U.S. futures dropped about 1%. Then the wave hit Asia. Their stocks followed suit, down almost 1%. And Europe, same story. It was like watching dominoes fall in perfect sync, a global downturn all because of that one little spark. So what were investors actually doing with their money? It was pretty simple, really. They were dumping anything that felt risky. We're talking global stocks, even the U.S. dollar. And where did all that money go? Straight into the classic safe havens. Gold, U.S. government bonds, on the Japanese yen, which investors often run to in times of turmoil. It was a textbook flight to safety, just on a massive global scale. Now, this is really important to understand. This banking scare didn't happen in some perfect, calm environment. No, it was more like a match being thrown into a room that was already soaked in gasoline. Investors were already on edge because of a whole bunch of other global problems. The whole backdrop was just incredibly tense. You had geopolitical tensions with this high-stakes meeting planned between President Trump and Vladimir Putin over Ukraine. Then you had economic worries, like China threatening to restrict exports of rare earths, which are critical for pretty much all modern tech and defense. And on top of all that, you had the constant simmering anxiety over global trade wars.
The world was already a tinderbox of fear, and this banking news was just the spark that lit the whole thing up.
So, after a day of pure panic across the globe, what should we be looking out for now? What are the key things that are going to tell us whether this crisis gets worse or if it just fades away?
It really all boils down to three critical areas. First, obviously, the health of those U.S. regional banks. Are we going to see any more announcements about bad loans? Is the contagion real? Second, you have to watch the central banks. How is the U.S. Federal Reserve going to respond to this? Are they going to step in? And third, there's the whole geopolitical stage. The outcomes of these big summits between world leaders could either calm things down or just escalate the tension even more.
Ultimately, this whole event was just a stark reminder of how incredibly interconnected and, frankly, how fragile our global financial system really is. A single problem at one bank can set off a chain reaction that touches every single market on the planet. The fire has been lit. The big question now is, what's next?